Hello, and welcome to another episode of Me Financial, where we're here to talk about your finances and find out what's right for you. I'm Michelle Moses, your host. I'm a certified financial planner, a realtor, a small business owner, a mom, and a podcaster. We are going to talk today about alternative investments. And I would say this is the bulk of how I get my clients, honestly, as a financial advisor, is because I do a focus on alternative investments. This is what people find the most interesting. I don't know why. I think people maybe are bored with the stock market and that they want things that they can understand, like houses and commercial lending, commercial buildings and things like that. And so people find it very interesting. So I have a lot of experience in investing in hotels and self-storage and multifamily and things like that. And today I have Chrissa Michelle here. She is a commercial mortgage lender. Am I saying that right?
That's right.
Okay.
Commercial lending.
Okay. For People's Mortgage. And she knows all about this. So we're going to kind of talk to her about how you could get into commercial lending or into commercial investing with just a couple of friends. And so that's kind of what I want to talk about, is making this more accessible, because a lot of these alternative investments are geared toward high net worth clients. And what I mean by that is you kind of go through the gamut. And so like, if you're talking about venture capitalists, a lot of times, that's like $1 million, or sometimes they have minimums of $250,000. And for normal people, some of the ones that I sell, the minimums are $50,000, which is still a lot of money. It's a good chunk of change. But it's mostly people that have been working for a long time, have been saving for a long time, and they're just at that stage. But that is I think what makes me stand out, because I am an independent advisor. And so I am able to sell some of these things. And that is why I have a lot of my clients, is because I don't think that people should be just invested in the stock market. I'm very, very big on that. And people just get more excited about that stuff. They're just more in control of it. They find it more interesting. They understand how it works. And so, they like getting updates about how the hotels are doing. They like getting updates about how the self-storage is doing, things like that. And you see how people that have money make money, and they're not just making money in the stock market and that's it. And I think when you have a regular job with a 401k and that is all that you have, sometimes people get bored. Sometimes people are totally fine with that. And there's tons of people that are. But if you are not, and you would like to get into some alternative investments, and by that, mostly what I mean is really it's a lot of different real estate. So, we can talk about, and Chrissa actually brought a little list here for me. It even includes like bowling alleys and convenience stores and campgrounds and car washes. And the one we were talking about was laundromats we were talking about before the show.
Yeah, buying a laundromat it's accessible. You can pull together 3 or 4 of your friends, put your money together, form an LLC, and you can buy a laundromat and have that passive income from a laundromat.
Right. And that's what we're going to talk about today, is how can you feasibly do it? Because it's one thing for us to just talk like, hey, get your friends together, but the logistics of it are what matter. Right. And that's what people really want to know, is like how to get started.
Well, and you want to make sure that you do it properly. You have to have the legal entity set up with the LLC. And that's something that you can help and guide people to. And you have the structure that can put that together for people. Right.
And then obviously you need some money too, but we'll get into the details of owning some of this. I want to start out with some of the stuff that, so I already mentioned some of the alternative investments that I do, and what those are called. They're called Reg D investments. And so they're for accredited investors. So they are for people that have $1 million net worth and above. And you say, hey, why are these limits on here? They are on there because you're taking a huge chunk of money and you're basically investing it with a company and a person. Really, it's a person or a team of people. And so when I sell these things, it's, hey, I really believe in this particular investment, but you have to trust me, and you got to trust that I did my due diligence on these people and that they are trustworthy, because some of these deals do go sour. And people do walk away with all of the money. Like they literally are just trying to have a job of, I'm going to sell people on this investment. And then sometimes, it hasn't happened personally to me, thank goodness. But, there's Ponzi schemes, stuff like that. So that's why it's for accredited investors, is because they can handle losing $50,000 at a time and it's not going to completely wipe them out. This is the rationale for it. I know that not everybody agrees with it. I'm just explaining what it is. So then the other level of things is these websites. So I don't know if any of you guys have seen these websites where you can go on and you can either help flippers. You can give them money and help them flip things. You can buy land. You can, or just acreage, I guess. You can buy different commercial properties. Like there's a lot of these things where you can do like crowdfunding for getting businesses off the ground. So if you are interested in getting your feet wet with some of that, that might be a great place to start, because I know, some of you are listening and it's like, oh, I could never afford that. There's investments out there for everybody, so you could get out there and you could try doing land. You could try, whatever you're interested in. And that really is my advice, is do what you're interested in and what you find exciting. Because if you're clear about that, then the rest of it will come. Like as long as you're focused more on what you find interesting and exciting, but then also investing at a regular basis, you can't become so hung up on this one investment needs to pan out. What you're trying to do is you're trying to do like the dolls or whatever on the, and you're trying to spread it all out on the table, and what's that game where you have the ball and you're spreading all your stuff out?
No, I don't know.
Okay.
Diversify.
Yeah. Well, anyway, you're diversifying. I'm trying to give like a visual or whatever, but you're just diversifying. You're diversifying all of your investments. So that's, I think, what you should be going for is stuff that you're interested in. And if you're not interested in your 401k that's in the stock market, that's fine, but it is the base level of where we're all at. And then after that, you can start saving outside of your 401k or whatever retirement plan you have. And I always suggest doing some of these because you get depreciation to write off on your taxes a lot of times if the investment is structured right. So, when you own real estate, you get so much depreciation every single year for residential and for commercial. And this is why people like to own it, is because after you get deductions for all your retirement plans, you can have kids and get, different deductions and credits, but owning real estate really is a big way to do that and offset some taxes, which is why people own rental properties and, things like that. So the websites are one thing. Have you seen any of the websites out there?
I really don't do those websites.
That's not
it's more the large scale commercial that I'm doing.
Yeah. So I'm kind of going off on a tangent here, but just talking about all of the alternative investments. But I'm very passionate about them because I find them very exciting. And the returns are amazing. If you get the right one, obviously, but when the returns are there, they're awesome. And people are just really interested in you understand exactly how it works. And with some of these, you feel like you might be helping people. So, if you're interested in it, I do suggest getting online, and looking for, you could look for crowdfunding, but you could also just look for alternative investments or Reg D investments, and it'll probably take you down, the right rabbit hole to go down online. But let's get started about talking about some of these commercial properties that you could go, because this is kind of what I want to do. I'm laying it all out here, you guys. Like, I started this podcast because I really want to engage with people, and I'm really going to give you like all the secrets of the things that are even on the tip of my tongue right now, like of what I want to do.
That's
with people.
why I called you and said, hey, let's do one. I really think we could do something about people bringing their friends together, and you know how to bring them together. I know how to do the loan for it, and you don't have to be just one person.
Right.
There's so much opportunity and so many different kinds of properties that can work.
Right. And this has already been an idea for months for me, is that because I have clients that want appreciation, but they have full-time jobs. They don't want to manage, a vacation rental property. They don't want to manage a residential rental property. All of that stuff takes work. They want to invest their money with somebody that they trust, and they would like to get depreciation. And by going in on some commercial properties with not a whole lot of people, you can get a lot of depreciation. And then obviously you would hire somebody to manage the property. You'd have to hire, a lot of that kind of stuff. But the returns, I think, would still be good.
Absolutely.
Depending on the type that you invest in.
Well, and you have the analyst to be able to look at those. And you have the person that's going to look at analyzing it from the upside, the downside, the inside out. And it's not going to be something where you're going to go in and say, well, we may make money, we may not. We want to just roll the dice on this. It's more of, we would like, these are the things that we would like. We want to make money. We want to have depreciation. We want to do this. We want to have this much hands-on. We want to hire this people to do this. And how does that all work for us?
Yeah.
And that's the property that we're looking for.
Right. Well, and then, but if you're working on like let's say a car wash or something, that might be something that you could go in with your friends and manage on your own, the three of you. But have a good operating agreement. Or be really, really good friends and very clear on what you're going to do.
Have a good operating agreement.
Yeah, have a good operating agreement, because you don't know, because there's always, just from experience of talking to friends, right? Going into business with their friends. Is that what you do? Yeah.
I've had that experience.
Yeah,
I've gone to business with my friends.
And you end up doing all the work, or one person ends up doing all the work and then the other people.
And then there's not a business, or there's not a friendship. One goes away.
Yeah. Yeah. So you do have to be careful with that, but we're not here to talk about that. That's on a therapy podcast, I guess. We're just going to talk about the business side of it, but yes, get yourself an operating agreement and an LLC, and then you can also buy a commercial building. And so the example that we're going to use today is just $1 million of a commercial building. And from talking to Chrissa, she says that you would need to come up with $300,000, correct?
Yeah, you want to plan for about 30% down on a commercial property.
Okay. And this is for new LLC. So you need to consider, like, when you are applying for a loan like this as an LLC, you're qualifying the business. Okay. So they're also going to be looking at your personal finances as a person, right? And part of the business. But what's really qualifying for the loan is the LLC.
The LLC, no, not the LLC. The LLC as a group is qualifying, but the business that you're buying has to generate the income to qualify. So think about, as if you're buying a house, you're qualifying with your paycheck. The business income is what is the paycheck. So that's what qualifies to be able to continue to pay every month the payment on the loan to buy the business. So that's really what qualifies you. The people guarantee that the business will be run. It'll be run smoothly. It'll be run profitably.
Have a good credit score. Be trustworthy.
So the people have to be of good quality credit and have substantial, financial background, so that they have some money in the bank. You can't come to it and say, I have no money in the bank. Here's my sole and only $25,000 that I have, and I'm giving it to you. You can't do that. But
you don't, just as a side note, you don't ever want to invest if you only have that amount of money. Keep it in a high yield savings account. There you go.
Right.
Okay.
So it's not necessarily the people that are investing. They're going to guarantee that the payments will be made, but it's the business that is the main generator of,
so it's kind of flipped,
whether it qualifies or not. It's the business.
Okay. All right. And you're hugely passionate about coin laundry mats right now, right?
I just think coin operated laundromat is a gold mine. Maybe a silver mine.
I wouldn't want to own it, but I think it's great. Yes. And I have another friend that's all about it too.
Yeah. I mean, you have to pick it in the right demographic area. You have to just, you have to know what it is that you're going to do with it. You have to have small things like details, like it has to have gas, because you have to run gas to run the dryers. But, I just think it's such a great, simple business model. People come, they wash their clothes, they dry their clothes, they go away. They wash their clothes, they dry their clothes, they go away. And it's not a complicated business model.
Right. Like a car wash is not a complicated one.
Right.
Either.
It's not a complicated, something like a campground.
Yeah.
That's complicated. You have to have the camp host. People are coming and going, and all the moving pieces and parts.
Well, and you have a list. She brought a list of all this commercial property, and mobile home park is on here, self-storage, a daycare facility, funeral home. I mean, there's quite a few on here I would never want to own. Golf course, a marina, bowling alley, bars and nightclubs, auto dealership, and auto body service and repair. And then, of course, all the apartment buildings, mixed use, senior living, and then all the retail stuff, healthcare, office, hotels, and I already said mobile home parks.
Right.
So,
on some of the larger ones, you need to have somebody with experience.
Oh, absolutely.
You can't just get this and you're going to be able to get a loan because no one has experience. But you have to have somebody with experience. But some of those things like car wash, campground, storage, they don't take a really...
And people understand them, just like me selling, doing some of these alternative investments. They love the hotels. Everybody stayed in a hotel. They know what it is. They know how they make money. They get it. Whereas some of those other ones would be a little bit harder to manage. But I don't think it would be that out of the realm of possibility of somebody buying like a small little retail chain, like a
strip mall
or something like that, and being able to rent that out. And so if you've got some friends, so you have to have $300,000 down. I'm sorry, we kind of got 30%. 30%.
You want to think about 30%. It's going to vary, but let's use 30% as a guideline. And you want to have 30% down. And you want to make sure that the business that is operating or that you're going to operate in the property is going to make money. And that has to cover your monthly mortgage payment on the loan that you used to buy it by once plus 25%. So 125%.
125%. Okay. Or whatever the amount is. And I think the point is that why we're talking about this is that is doable for some people, and it doesn't have to be 3 people. I mean, you could have 5 people, you could have 6 people, but the point is that you're making an LLC a separate entity to hold this piece of property. And that is the way that a lot of people do it. Unless you've got the funds, like what I'm talking about, that's a whole lot of other paperwork and registering with the SEC, and there's a lot of different things like that. But if you're just going to be buying like a one-off, forming an LLC, having the members in it contribute money, and then having an operating agreement of who's going to be the main point of contact, who's probably going to be running it, and who's going to have, what tasks would be a good thing to outline.
Right. In your operating agreement, you would have that. The reason I like this so much is because for a long time, people would buy residential properties and use it as investments. They rent them out. But now the commercial interest rates are lower than the residential interest rates. So you're getting the money cheaper to buy a commercial than if you're buying an investment property. The investment property, single family home, they're almost being cost prohibitive in a lot of cases.
Oh, okay.
Oh.
Yeah. Oh, I mean, I guess I could see if the rate is that high, then yeah. And I didn't know that the commercial rates were lower than the residential.
Commercial rates are lower than the residential rates right now, which is crazy. Let's go get commercial property.
Yeah. Well, and coupled with COVID, right? Not everybody's going to the office anymore. And so I think we're going to have a real shakeup in some of that office space that was there, maybe being used for something else. Yeah. Because I definitely feel like people are wanting to get out more. And I'm going to use the word engage again, because that's why I started. I want to engage with people. And I know I'm not the only one that wants to engage with people. We've been hiding in our houses for however many years, and like we're ready to get out. But people don't want to go to the office. We want to go and do things. So I'm very interested to see what's going to happen to all this office space. But anyway, we're talking about this because I do think that it's a good time to be talking about it, especially if the rates are so low. We're going to have a big, huge shakeup in commercial. And I've had this idea, because I have these clients that have cash and we don't know what to do. And I won't want to say we don't know what to do with it. It's that we've done a lot of these other alternatives. They have a house. They don't want to buy another house, like these kinds of things. They have their retirement, like they're maxing it out, and, so I'm not saying that they're not doing other things, but then they have some money left over, and they would like to get some depreciation because that's, they're getting killed on taxes. So I think this is a great idea.
Yeah. And there's endless things that can be done there. You just look outside and you can see all the different businesses and opportunities of what you could buy a building for.
Yeah. And it doesn't take that much to discover like how much it's for sale, but you do need to get some professionals involved to talk about those details. But usually the commercial brokers can, talk about all the build outs and things like that. And
then they can guide you.
Yeah. And then they can connect you with analysts and things. But Chrissa was talking about like, I want to do this. I want to do this for my clients. And I am currently, researching how I can do it and how I can value my time, but also give them a service. Right. And so when she called with this idea, I was like, this is exactly what I've been wanting to do. So let's talk about this and the alternative investments, because people are always very interested in those. And I mean, your even alternative investment could be having an Airbnb at the back of your house in your casita. I mean, that's fine. That's another form of income. I'm good with that. But Chris and I were just talking about how we kind of feel like the Airbnb thing might be kind of running its course.
I feel with all the regulations and all the...
it's kind of coming back down to be like a norm, you know,
it's
like
not
it's
that
not so
special
new
anymore.
Yeah. I absolutely agree. So yeah, that's all I have to say about.
Yeah. I just think the message is it's doable. It's absolutely doable. It's not out of reach and it's not as difficult to figure out how to do as it might appear to be.
Right. And this kind of goes into what I was talking about last time, is that if you would like to, like, okay, so say I said this was, you're each going to put in $100,000. Okay, well, I don't have that much, but then if you're interested in this kind of thing, then go to these websites and start researching. The only way that you learn about investing in your money is by doing it. And you have got to be willing to make a mistake. You just have to. And they're not all going to turn out. And that's why you diversify, is because some of them are home runs and then others are just like, whatever, that didn't make. And that's just the way that it is. So you can't be coming and investing, because people don't do this so much anymore, but at the beginning, people would be like, okay, I have $3,000 in my savings. I'm going to give it to you to do something with, because I really want to make money on it. I want my money to make money. And you can't do that. Like you can't have an investment have to make money, because it's like that teddy bear thing, the little girl that like kills her teddy bear because she loves it so much, or, it gets kind of like that. That's the way I always
teddy bear.
Don't you remember that little girl? I know I'm using all kinds of weird things today, weird analogies. But she, you're going to kill it with worry. Really, you're going to be worried about it every single week. So you've got to be able to just like let it go and trust that you did the right thing, and then move on to the next thing. And then just focus on making more money so that you can then invest more, or focus on making more money so that you can then save it. But don't go into these things, oh my God, it could make 25%. And that is number like 4 on the list. I mean, how much it's going to make is absolutely something that you review. But if you are investing in something that you're just like, oh my God, this is going to be a home run and blah, 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 blah. And you're only like investing it like that's a craps table of what your possibility of, upside is. That isn't the right feeling that you need to go with. You need to be going with a feeling of, you feel like it's a great investment. You feel like it's run by the right people, that they're honest, that you can depend on them. And that's, and then you get into like the numbers of everything else, of how much is it to invest, and then how much is the potential return. But yeah, you can't get into that only investing in things for the upside potential. That's where people get burned really bad. So
yeah, I feel like you have to pick something that you're interested in.
Yeah.
Pick something that interests you, that sparks your imagination, that makes you curious about it, and then start doing the research from there. And then you can decide if it's something you want to do.
Yeah, absolutely. I mean, I think like the house flipper thing, if that's something that you would like to invest in, you could invest, I don't love doing the websites because I can't meet the people. And I have a real thing about, I like to meet the people that I'm going to invest in. I need to know that they're honest. And I also like to have, that they have skin in the game. I want to know that they have money in the investment also.
Yeah, that's a really good point.
Yeah. So that's one of my litmus tests for these investments, is do they have skin in the game? Will they lose something if this goes sideways? Because from my experiences, the ones that I've seen that have gone sideways, the people have just been like creating a job. I call it creating a job for themselves. Like, let me come up with this business idea, and then you give me money, and then let's hope it works. And so I think it works better when people have some skin in the game other than just their time.
I think that's a great barometer. I really like that.
Yeah. So I don't know. That's my thing. And so I don't really love the websites because I can't meet the people. But if you could call them or do like a Zoom call and get like a feeling for them, then yeah, I mean, maybe that would be a good thing. Works, yeah. But the website thing has just never been, my thing, unless I was like, they have those, like you could give loans, micro loans, to people in third world countries. Like that's more my style if I'm not going to meet somebody. But I've heard some great things about some of these websites, and it really gives access to non-accredited investors to invest in some of these real estate projects. So that might be a great way to get your feet wet. But again, don't go into it like I got this thing and it's a home run and it's going to make me rich. Like, no, that is just not the way that it happens. You have to have multiple things going in multiple different areas. And that is when you get rich. That really is. Like, you just have to keep moving.
Yep. Compound interest. Interest.
Yeah. And then you check in with them and see how it's going. But it's just like in sales, getting that whale, or what do they call it? Don't they call it the whale or something?
That story, I think I might know.
Yeah. I'm doing really bad with my analogies today, but you're not going to have the whale. I mean, you probably are going to have a whale in finance. It's going to be a house that you buy or something, but it's not going to because you thought that it was going to be the big home run winner.
I think it's a lot of little things add up.
Yeah. So anyway, write to me. Let me know if you have any ideas that you want me to talk about. If you have particular alternative investments that you want your opinion on, I want my opinion on, want your opinion. You don't want your opinion. You want mine. And I want to hear from you guys. So please subscribe and tell your friends, write a review. It's Me Financial Podcasts, and we're everywhere where podcasts are distributed.